and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick.
That's funny. The new theme song, I put it out there, I think. Let me see. I put it as a short, in fact. Oh, let me skip that. Let me see. View your channel. And shorts. There we go.
Every day I wake up, grab my coffee cup, open my laptop, time to level up. Daily stock picks, my trusty guide. The Trendspider charts will reach the sky. Podcast sensation, seeking elevation with algorithms and seeking alpha's vibration. Daily stock picks, we're on the right track. Together we'll trade, no looking back. Ooh, Gary's got a podcast, Daily stock picks in town, talking about the market, he never lets us down. Seeking alphas his Bible, the guide he carries near. With everyone he spills, the bulls will start to cheer. Listen up, it's time to play the game. Daily stock picks, Gary's got the fame. Buy low, sell high, that's the game we'll play. In the stock market, we're here to stay. Every day I win.
It's a personal preference. I did, 10 new songs, I guess, this weekend. It was kind of, it was an interesting weekend of, first weekend of football, too. Which, listen, I mean, Thursday night's game, incredible. Friday night's game, good. F the Eagles. And yesterday's games were awesome. It was a great day. Brokerage, Bitcoin and crypto. Didn't get anything there. Nothing in covered calls. Energy names, nothing there. Leveraged ETFs, AMZN. Low cost Vanguard, Nothing. Spider sectors. DraftKings. mRNA. Let's go to the Dow. See if there's anything on the Dow. Nothing. Let's go to NASDAQ. mRNA is it? Wow. Let's go to the S&P 100. DHR. D.R. Horton. Danaher. Why do I always think that that's D.R. Horton? That one looks interesting. Yes. Seeking vibrations. Daily stock pick in town. Morning, Jeremy. It's a good earnings report. Okay. Oh. I was up late. I didn't sleep well. There were two dogs that insisted on running around. Oh, mother effer. I hate when it does this. Settings and privacy. Display. We're going lights out. I don't know anybody who doesn't like dark mode. And I try and set it up so it does that dark mode constantly. It keeps switching back.
And here we were.
That's a good podcast. An hour and 18 minutes. They talk about nuclear energy. This is bullish for PayPal and Shop. Tesla. God, over the next month, they're going to have super amounts of catalysts. This was a good one. Want to know why Costco trades at such a multiple? I mean, they just are masters of making sure that you walk through, and every minute that you spend in the store, you're more likely to spend more money. Dell Technologies and Palantir added. AMD retest after a death cross. This was interesting, I thought, because that'll take it. Then we're going to get into NVIDIA. Is it cheaper than other stocks? And this is Brad Gerstner talking about, is NVIDIA in a bubble? That was great. This is Wedbush's Dan Ives talking about NVIDIA after going to Asia and seeing things. That's a good little interview. Then you've got Tom Lee talking about a great opportunity to buy. Let's see. I'm waiting until it gets to Tom Lee, because he does give a 30-second kind of overview.
NVIDIA's last 8 times. NVIDIA's 4P.
We're going to put him on there. Then this is NVIDIA no one wants to hear based on the next 12 months earnings. NVIDIA is now cheaper. And again, it's based on the next 12 months earnings. It's cheaper than Microsoft, Walmart, Chipotle, Costco, Netflix, and Apple. I mean, that just kind of points it out. And this, we're going to go over the Apple event. This is the iPhone, history of the iPhone, rise of the iPhone, how much revenue each year is derived by the iPhone. And that's kind of estimated, but iPhone features ARM, so you could invest in ARM with the iPhone explosion, because they'll see some licensing revenue. AI could go worldwide. I mean, that's interesting. This is the kind of the look at what we're going to deal with this week, which is a fucking debate. Inflation. Biggest movers of the day. Dell, Boeing. Big Lots plus 39%. I mean, if Dollar Tree and Dollar General weren't like just out there, I mean, I could say, you know, hey, let's hold on to Big Lots just because, but yeah, trending stocks amid Wall Street's works week. This is United States Steel, Nvidia. This was really on Friday, I think. That's just, you know, hey, there's the fear and greed index for CNN for stocks. You know, again, the Trendspider is trying to make the point. We probably have more downside. And I've got a good one that I posted in my personal stuff back in 2021, how the 19th of each month during that year was crazy. So I'll post the chart in the newsletter. Morning, Joe. Larry. Yeah, let's just see. What I want to do is post trend lines. Oh, oofa. When am I going to be on Spaces? Hold on. Twitter. Come on. $85 million New York City, Upper West Side. Wow. I will be on Spaces tomorrow. I'm gonna pop in there every now and then too on Wolf Spaces, just to blow shit up. Morning, Jake Cruz. There we go. We'll just put that up there. Okay. Oofa. Oofa. God, I look dumb when I look at myself staring into the screen. I sit there with my mouth open, my eyes squinted. Okay. Oh, I do have a new, and I can do this. Nah. I don't even know it, but I do have a bundle offer now with Seeking Alpha Premium and Alpha Picks. I'll put it in the newsletter. Okay. Joe, I'm probably right in thinking that they probably still will go on strike. Boeing's up 3%. I'm pretty sure they're going to go on strike. I can't imagine you have a management team that is so susceptible to public criticism and that a union that is in negotiations doesn't hold them to the fire or roast them publicly. And that would be my guess. If I were heading the union, I would say you're going to give us everything that we ask for, or else we're going on strike. And that's with your stock price at 160. I think that's going to be the nail in your coffin. Although the new CEO's on his way out anyway. Does he hold their feet to the fire? I don't know. And if anybody if you're an NFL lover and you didn't sign up for NFL Sunday Ticket after seeing what I was watching 4 games at once. I mean, it was amazing. Not one glitch, not one. It was phenomenal. Google, high five. Okay. And we've got all that open. I've got Seeking Alpha. Oh, where's my Catalyst watch? Right after weekend review. Summary of last week, and that should be Catalyst watch. Trending stocks, there we go, okay. I need Catalyst watch there. It for some reason opened up there. We're back home. We got FinViz. That's bloody. Yeah. Okay, let me check that the screen looks okay. I think it does. I got screwed up last week on that one. Because I need to get a dedicated computer for the podcast here. Yeah. Yeah, it's... When they see blood in the water, it's kind of... They're like sharks. Okay, it looks good. I fly out Thursday, I think. Hold on. Let me just make sure my schedule is right. Frontier. Your boys flying Frontier Airlines. It's the best. I don't mind them. As long as you're not taking a bag with you and you just kind of have a little backpack, you're perfectly fine. What? Hold on. Boy, that's not good. Is their website down? Did CrowdStrike take over again? It's telling me I got 20 upcoming trips. There we go. Thursday and Monday I come back. Okay. Okay. I'm going to hit record now. Whew. Good morning. It is Monday, September 9th. Last week, not a great week. It is what it is. Scheduling. This week I'm on Monday, Tuesday, Wednesday. I am off Thursday and Friday. And next week I'm off Friday. It's my parents' 56th anniversary. I don't know. Somewhere around there. Maybe 55th. I don't know. 1969. So it's probably their 55th anniversary. They're having a party. So I'm going up there on Thursday. I will be flying back Monday. And if you didn't see the freaking, NFL football, oh my God, what a freaking weekend of football. But that's my schedule. And then this week, just so you know, I'll be popping into Wolf's. You should be following Stocks on Spaces and Wolf. Those are the two kind of spaces that I hop on every now and then. But I'll be on Tuesday tomorrow at 3 p.m. Eastern, just so you're aware. We talked a lot, this weekend's newsletter. When does the stock market enter a bear market and when does it present an opportunity? And I did a video of drawing trend lines and trying to find things out. And it's in the podcast style. So it's kind of what I'm doing is on the paid newsletter. I know most of the paid newsletter subscribers come in from the podcast. So I'm going to try and do more video. The other thing that I announced on there is a kind of post your own chart. And we'll get on there privately and kind of do a little analysis. So paid newsletter subscribers, it's just another benefit. Where are we on the Qs? And I'm going to do the trend line thing here, kind of show you what I was looking at. I did it for specific stocks on there. We'll do it for this index, which is QQQ. This one, if you didn't know, it's the weakest of the kind of indexes, SPY, DIA, QQQ. You don't have IWM in this, but you have it between mid cap, small cap, and micro cap. You could do IWM, but take a look. I mean, today, this was Friday. S&P was down 1.6. The NASDAQ was down almost 3 at 2.6. Okay, over 1 month, the NASDAQ is up 2%. The S&P is up 3%. Over year to date, the S&P is up 13.6. The NASDAQ is 9.56. So we always talk about how these gaps always seem to come into play and you kind of go over and under and blah, blah, blah. Over 1 year, the S&P is up 21. The NASDAQ's up 19. Again, that's SPY versus QQQ. SPY tracks VOO for the most part. Over 3 years, SPY is up 19%. NASDAQ is only up 17%. So it's lagging behind there. And the NASDAQ, when you look at the 52-week range, you're kind of in the slightly right of the center. And the S&P's close to its all-time high. So it's interesting in that I think maybe, and this is again maybe, we'll go over this, maybe the Qs have a chance to catch up. On this 4 hour, you're trading under your 200-day. Your 50 days moving negative. Your MACD below the oscillator. Your RSI at 30. In the pre-market, the Qs are up 0.79. We're getting a nice little bounce. Does that mean that, hey, all lights green? No, because you're still on the bottom of the 9-day, so you still have some weakness there. And if we go to a weekly, and this was part of the point that I tried to make in the newsletter. If you go to the weekly, it doesn't look horrible at all. I mean, there are just only a few times where you bought over the last month where you're negative. And many times in history there were times when you bought and over the next month you were down, but you continued higher. So I do think it's important to try and find a trend line, okay? And one thing about trend lines is you want to anchor it at a bottom. And so if we look, and I'm going to draw this trend line from here, December 2022, okay? We can look at that. And if you just draw a trend line and you touch at least 3 points, we've broken it. We've broken it on the Qs. Okay, I go into much more detail on the paid newsletter, but we've broken that trend line if you look at the weekly. If we go to a monthly and we look at this and we say, okay, if we look at just this small portion and we go back to October 2022, or even we'll do December 2022, we'll point it down there and we touch 3 lines, we've broken it. We've broken it. So what does that mean? Means it's weakness. Means that if you think that the NASDAQ will move back up, then maybe we have an opportunity. Now, if you go over here and you look at QQQ and you say, okay, what are the top holdings of the QQQ? It's Apple, it's Microsoft, and it's NVIDIA. So let's go to Apple and let's see, is Apple expensive? Go over to the valuation of Apple and you look, the PE is 33. Well, let's go to the charting of Apple and let's select metrics and we'll go to the valuation and we'll choose PE, the trailing 12 months. And let's look at that. Let's look at how Apple has traded for the last 5 years on PE. Seems a little bit expensive to me. Does it have a pullback opportunity? Maybe. Look at the last 10 years. Doesn't look cheap. Doesn't look cheap at all. So again, the largest one in the Qs, it may have more downside because that's the largest holding in the Qs. So I'm not trying to talk a bear market here. I'm not trying to tell you these are the two trend lines that we drew. You can see they're right in line. If we pull this one back because they're showing up on all things, you can see it's right in line there. So from the monthly and from the weekly, it's right in line. And we've broken both. So is it expensive? Maybe. In the newsletter today, the newsletter is free during the week. So sign up. It's dailystockpick.substack.com. In the newsletter today, I will post something. I found this interesting in 2021. I posted that a SPY chart from Trendspider that showed the 19th of May, June, July, August, and September. It all hit a trend line. And so the trend lines can be your friend and point things out that maybe you don't see in a moving average. Maybe you don't see in an indicator. Maybe you don't see in a volume profile. Trend lines are important and trend lines are there. Now, you might say, hey, how'd you draw those trend lines? Well, it was Trendspider. Trendspider draws the trend lines. You basically put in your low point and then you touch 3 points. If you want Trendspider, you can go over here and just hit Trendspider. It's the top link and you can get it for under just over $50 a month, $53.50. Okay, what does that get you? Well, it gets you a full year of Trendspider, and it gets you my 4-hour algorithm. It gets you my 65-minute algorithm. It gets you every strategy that I use on this podcast. It gets you the tools right here. I basically email you my scanners, my watch list, everything. So you can do whatever. When I'm on vacation, you can do your own podcast essentially with Trendspider. Okay. That's the biggest thing that it gets you is you're able to look at these things on your own. And that's why in the paid newsletter subscribers, I'm going to say, hey, give me your charts. Let's look at them. By no means am I a chart expert. Okay. The only expert on a chart is the price. That's it. They can tell you 100% stock's going here. No, there's nobody that can tell you that. The only expert on a chart is price. But as you start to look at these things, as you start to understand, remember, charts are living, breathing things. You get good, and it doesn't have to be 100% of the time. It could be 60% of the time. In fact, the algorithm wins on here on QQQ. It wins 48% of the time, but you make 51% over 2 years. Whereas if you just bought and held, it's 47%. So the algorithm seems to do things a little bit better than buy and hold. It's not always like that. But again, if you can't sleep at night, the algorithm helps you. So I think any charting program that you have, I think it's important to understand where you're putting your trend lines, how you're drawing your trend lines, what time frame you're putting your trend lines on, and how you read those trend lines. So I want to try and help the paid newsletter subscribers do that. So I'll start a thread within Substack that will be, hey, okay, here's a chart that I want you to look at, and you'll send it to me, or I'll put some charts in there, and I'll say, okay, do these charts in Trendspider and post your things, and then we're going to meet on Wednesday, and we'll go over the chart. Things of that sort. I want it to be a little bit more interactive. So yeah. This was interesting to me, and this is SPY. I don't usually look at SPY. But this is, a daily chart of SPY that Trendspider posted. And they're showing you up here, the CNN Fear and Greed Index. It got to greed. up here at the top. And it probably got up to here to greed up top here. Now at the low, it was at extreme fear. So it's kind of like, that Green Day song, Wake Me Up When September Ends. Because right now you're in fear. You're not quite at this 19, which was extreme fear. You're 39. It's scary. So do you want to wait and buy something, right now, or do you want to wait till we get to extreme fear? Because we may never get to extreme fear. But I can tell you, as you get into this fear category, it gets very, very interesting for those bull people who basically say that, hey, it's a bull market. This is your simple pullback, and that's it. Now, 1 week ago, we were at 62. Previous close was 39. 1 month ago, we were at 23 extreme fear. 1 month ago, we were at, that was what? August 9th? That was right after the Japan trade. 1 year ago, we were at 51. There was no fear at 51. And what did we do last year? We were at neutral on, let's see, September 9th. September 9th, you were at neutral. Where were you trading? You were trading, let's see, it was 376. You were at neutral. You're at 450 right now. So time frame matters. Again, time frame matters. Just take an interesting thing. Trending stocks amid Wall Street's worst week since March 2023. That's a year and a half ago. Now, trending stocks, U.S. Steel. We all know what's going on with U.S. Steel. NVIDIA. We'll talk more about NVIDIA. Is it a bubble? Is the Justice Department delivering a subpoena to them? Who knows? Broadcom plunged 15% on their earnings. That's an overreaction in my opinion. ChargePoint plummeted 31%. Just going back to Broadcom, it is expensive. Dell and Palantir got added to the S&P. We'll go over those two. UiPath shares fell 7%. GameStop triggered another roaring kitty sensation on Twitter. Yes, there was a roaring kitty situation on Twitter. I'm not necessarily going to go into it. Their earnings are today, I think, but it might be interesting. Now, here's my favorite Seeking Alpha email that comes out. It comes out at 3 p.m. on Fridays, and it rates it by day as to what the upcoming week will hold. Okay? This is the best the best thing that comes out from Seeking Alpha. I would pay just for this. And if you want this, then you go to my link tree. It's the second link. You get $25 off and a free 7-day trial. So go and read that. If you want to know what's going to go pop during the day, go and read that. That Catalyst Watch has everything. Whether it's some technical stuff like Apple's big day today, or it's the debate on Tuesday, or it's inflation and other things that are coming out. That's the best newsletter. Again, that second link is where you get that. I'll put this also in the newsletter so you can get the link. Now, the biggest stock movers today, Dell Technology and Palantir. They both surged over 6%. Palantir specifically, I mean, that was a no-brainer. It's up 8.51%. You can see that once we got to this 25, old resistance turned to new support. And that's the key. Old resistance turned to new support. And it's held it. Okay? It held it. During this little bounce back, it seems to have held it. Now, August 5th, it went down to a low of 21.23. Nobody could have predicted that little slight crash, but it held it for like a day. The close on Monday was close to 25. So you had your opportunity. It's up 8 at 32 today. I would argue that this one's still expensive. So if your time frame is long term, I think you're okay, because I do think that they grow into this because, again, they're growing their revenues, they're growing their business. It's going to expand out, but I'd still worry about the valuation. And so I'd urge you to try and buy this closer or under 30. Again, I think 25 is your support level. So if you bought it at 30, then you've got what, a 20% downturn, which is like, a 10% downturn, somewhere in that neighborhood, between 10 and 20%. I'm not great at numbers. But again, your MACD, it's a little bit high. Your RSI is at 69. I don't think there's a reason for a long-term investor to chase this. The algorithm just got you out with an 8% gain. Now, it might get you back in after today. Might get you back in. That just might mean that we go for another run. You might be going all the way to 35. But I think there's better places in the market because I think there's some beaten down stocks. The valuation on this one is just a little bit nuts. Now, Dell is not in the core portfolio. I do hold Dell. I want more Dell. Algorithm got you out with a great 15% gain since the August 9th entry right there. That is, you could have had more. You could have had all the way up here, and if you timed it, a nice 26, 27% gain right into earnings. That was great. Since earnings, we've gone down. We're coming back up. Today, it is up right now in pre-market. We are up 5.39% at 107. My average purchase, I think, is like 113 or so. I'm going to add to this one. Once I think the algorithm's going to get me back in today with a good hold of some good candles. I think it gets me back in today. We're under the 200-day on there. If you look at the daily, we're just using the 200-day, which is at 103. It closed at 102. 103 is your support level. That's the 200-day. So there's gaps all over above here. You can see that trend line. If you go and you look at a weekly on this one, if we were to anchor this trend line down here, it's broken it. But I would argue we are well below that trend line. But I would argue that this one, the valuation makes sense. And all this MACD did was reset itself. Your RSI down here on the weekly is at 44. I think it's a good opportunity. Again, if the AI train is still moving, I think it's a good opportunity. Boeing rose 3% after its biggest labor union reached a tentative agreement. I think they're going on strike. So I think they're going on strike. And the biggest thing, Big Lots shares plunged 39% after Nexus Capital agreed to acquire all of its assets. It plunged. If this isn't, come on, who's still holding, Big Lots after Dollar General and Dollar Tree? Come on. You got to be nuts to be holding that one. Stock index futures are up after Wall Street's post-job slump. This week after payrolls is often quiet, but with 25 basis points versus 50 basis point Fed debate for next week, because the Fed's meeting next week, there will be plenty of volatility in the market. What do you want to do for volatility? You want to take a look at you can track VIX on Trendspider. You can track it on a chart. I just like doing it here in Seeking Alpha, and you can see the 1 month. 1 month back, you don't even have that 60 spike. That 60 spike is in the rear view mirror. This wants to hang out at 20. Okay, it's at 21.14 right now. It wants to hang out at 20. If we get below 20, then I think one of the social requests is going to be SQQQ. If we get below 20 on the VIX, I think you use UVIXY, SVIXY. I think you use one of those triple leveraged ETFs to try and do it, or use SQQQ. Just use one of those inverse ETFs. Again, I'm dumb. I can't do options. So I think that's where you want to do. Last Friday's employment report essentially summarized a soft economic landing. There was evidence of slowing higher in the employment details and also consistent with the soft landing while the Federal Reserve is in late cutting rates. The delay has not done much economic damage yet, said Paul Donovan of UBS. It hasn't done much damage. I mean, listen, this week will be all about next week's Fed meeting. It will be about the presidential debate tomorrow. It will be about inflation, which is CPI and PPI on Wednesday and Thursday. And then, there are going to be a ton of people debating soft landing or hard landing. I still think you have downside, okay? I don't want to be the bear in the market. Make no mistake. There will be a time to add. I want to add into strength. That might be too late because I do think that 450 is a good, solid support level here. But am I sure of it? No. And the reason I'm not sure of it, we're at September 9th now. We're not even halfway through September. And look at the last 14 years of the Qs. This is the month where you want to buy. I have tons of exposure to QQQ. Tons. I don't need to add to it. Do I want to add to it? During this weakness, I'd probably like to add to it. I mean, that's the reality of the situation. During weakness, I'd like to add to it because we're going into arguably two of the best months of the year. And we can bring this back. This is going back to 2010. We can bring this back to 1999, okay? You're still looking at the worst month of the year. And then you're looking at arguably two of the best months of the year. So you don't want to get scared out of this. If you're not in the market, again, I'd urge you to be in this market. Look at buying. But I would buy on a day like Friday where it's down. Here on Monday, I think we're getting the reaction that we expected because nothing happened over the weekend politically. Nothing happened over the weekend from a huge blow up. Bitcoin is up. Risk is back on as the market digests this stuff. And again, SPY and VOO, they're close to all-time highs. The Qs are what's being reset. It's being reset by the valuation of the top 5, 6, maybe 7 stocks in that index. I think that's what's being reset. It doesn't mean that these are going to crash. Apple is not going back to 150. And if it does, it's a buying opportunity. They have so much cash. They have so many products. They have a huge iPhone upcycle. The event today, we'll go over that one next. But Apple at 220, I don't know that you want to load into Apple at 220. I don't know that you want to buy an index where its largest holding has a multiple of 33. Now, will that multiple come down with their October earnings? Probably. They're probably going to see some type of guidance where the forward PE is going to come down. But do you want to do that into strength here? You've seen it double top out at 230. You've seen, if we just post this at 230 on Apple. Now, I'm not trying to be a bear on Apple. By no means am I a bear on Apple. But if you put that 228 right there and you see this crosses 1, 2, 3, 4, 5, 6, 7, that's a pretty good indication that that's some type of resistance that it's putting up there. The MACD, super high. The RSI, super high. Do you want to get out of this at 220? I wouldn't before arguably a huge product announcement. But traditionally, it's been sell this event. So if you've got huge gains in it and you don't have tax events and there's reasons to trim it, go ahead. If you're not sleeping at night because you're nervous about what Apple will do because it's at highs, trim it. Take 10% of your total position and just trim it. Because if you miss that 10% and it starts to go up, then it's not, you're just locking in profits. That's all you're doing. So I would argue, do not be afraid to start trimming at those levels just because of the PE. So that's this week. Now, Apple, again, the bullish part, this is Dan Ives, Webbush. Apple could aid 20% of all consumers around the world to access AI. That would be huge. And they're doing it with Google chips. They're not doing it with NVIDIA. They're training on Google chips and they're using their iPhones. Again, Google put out their own AI on the Google Pixel, and it's there's not events like, it's not covered like the Apple event. Apple AI just gets the business world around there because I think it's like 60% of the US has Apple. I think of the world it's like 40%, but the other 60% is all split like between, it's still the dominant platform with computers in our pockets. So this would be bullish for the stock. Apple's upcoming features ARM's newest chip design. Could be bullish for ARM. We can talk about ARM for a little bit because maybe you have an Android phone and you love your Android phone and you want to get into ARM. Well, ARM is a recent IPO. So the algorithm makes you 182%. You're only 11.9 months. So it's just a little under a year. Over 11.9, you make 182% with 9 positions, less than once a month in the 4-hour algorithm, okay? It's got you out. But today, it's up 3%. Let's see, the market just opened. It's up 3.5%. Do you want to buy this? I'd argue it's weak. I'd argue anywhere between 100 and 174, probably good. But then you go and you look at some of the valuation of this, and the valuation is nuts. The valuation is absolutely crazy. We talked about Apple trading at 30 times earnings. ARM is trading at 83 times trailing 12-month earnings. Now, its forward guidance, it's trading at 75. You may say, oh my God, it's trading at 75. That's cheaper than the trailing. Well, it's gap, or I'm sorry, PEG, which is price earnings growth ratio. It's 2.48. That's high. So again, I think the valuation on some of these stocks is just getting reset. We talked about the iPhone. Okay. This is the fiscal revenue, the iPhone revenue per fiscal year, going all the way back to 2006. When I initially started to buy Apple, I think it was 2004, 2006, somewhere around there. 2006, nothing. 2007, 123 million. Then you get to 1.8 billion. Then you get to 13 billion. Today, you're at 200 billion. That was 2023. 2022, it was 205. So you're reducing your revenues. That's what's caused Apple stock to hit a roadblock, is the revenues have started to come down. This could push it to 250 billion. If that does, that stock will go to 250. So understand, the stock is moving up based on the iPhone refresh cycle. If you don't get an iPhone refresh cycle, if something happens and something stalls and Apple says, yeah, we're not going to see that many iPhones, although everything indicates they believe that they will. Yeah, if that happens, you're screwed. You got to sleep at night. Apple, not surprising that Berkshire sold half. This article, great article. It looks at Berkshire's first Apple position. It looks at the growth. It's not surprising that they sold half their position. Apple's a solid company, but in recent years, sales and cash flows have grown, but less steadily. Buybacks occur for nearly all of free cash flow and occur at multiples reaching 30 and offer less ability to magnify shareholder returns. That's the problem. And so this author thinks that the valuation's the problem. I would tend to agree. So am I buying Apple? I'm holding it. I'm not buying at 220. If it pulls back to between 200 and 210, my ass is adding to it. Even though 60% of my portfolio is Apple, I'm adding to it. Now, let's go over the valuation of NVIDIA, because everybody talks about the valuation of NVIDIA. Let's look at NVIDIA's stock chart, okay? Today in the market, it is up 3%. It's at 106. It uses the $100 mark to bounce off it. It's been very clear that $100 between 100 and 110 is a good place to buy. We can look at that trend line. I think I put this on the weekly. When you look at this trend line from the bottom of 2022, what does it hit? Oh, it hits the January 2023 lows. It hits the January 2024 lows. And then it hits the April pullback that we saw. And it hits this pullback. If you hold this downturn on the MACD, you ain't done. Look at the RSI. It hit 50. The last couple of times it hit 50, we took off. So I think it's a coin flip. The valuation on NVIDIA is not nuts. It's not nuts, but it's cheaper than Microsoft, cheaper than Walmart, cheaper than Chipotle, cheaper than Costco, cheaper than Netflix, and cheaper than Apple. Okay, very simple math. We can go over NVIDIA math. NVIDIA earnings per share, 3.37. Price, 101. Net trailing months, PE, 30.1. Okay, Microsoft, you can see it. Net trailing months, earnings per share, 1309. Price, 402. Net trailing PE, 30. I mean, it's very simple math. Again, these are simple and easy to figure out. NVIDIA is trading at a cheaper valuation for its trailing 12 months than Microsoft, Walmart, Chipotle, Costco, and Netflix and Apple. It's the valuation. And if we go and look at NVIDIA valuation here, and we look at this in Seeking Alpha, we can see the valuation's nuts. I mean, the PE, 36. But let's go and chart the valuation, because we did Apple before. We looked at the PE, and we're going to select metrics, and we're going to do valuation, and we're going to do PE. Okay, this is the trailing 12 months, so it's got nothing to do with the forward. We're going to look at PE, and let's look at 3 years, okay? We're down at the bottom. 5 years, you're down at the bottom. It's not trading for a super, super expensive price. 10 years, you can look at this. We're down at the bottom. You're down near the bottom on this one. Now, does it mean that NVIDIA will absolutely grow. No. The market cap here at 105 is 2.5 trillion. The largest market cap, the only larger ones in market cap are Microsoft and Apple. That's it. And they're at $3 trillion. The market cap matters. At some point in time, the market cap matters. And so do you want to buy this one? Well, you can say, hey, on valuation, it makes sense. Tom Lee thinks so. He makes the case right here. You can watch this video. You can watch this video from Dan Ives. He just got back from Asia. He said, hey, it's cheap. You can take a look at it. And again, is NVIDIA a bubble? Brad Gerstner, who I really, really like, Altimeter Capital, Altimeter. I forget where to put the enunciation, but Altimeter Capital. I like him a lot. 29 seconds. Go and retail. He makes the argument that all of those previous bubbles didn't have the revenue that NVIDIA does. So it's interesting. We're at an interesting time, an interesting fluctuation. I am 90% invested. I am feeling very uncomfortable with that 5% sitting on the sidelines because typically I'm 95% invested. I like my money working for me. But I pulled 5% out here in August where I shouldn't have pulled 5% out. I should have waited a few weeks. You want to sell and you want to trim into strength. You don't want to do it on weakness unless you're absolutely sure that we've got more downside. And I'm not 100% sure that we've got more downside. I'm not sure that we have upside right now, but I'm not 100% sure that we have more downside. So wait, this may be another August 5th where all of a sudden, a couple of weeks later, we're up 10%. That's when I would tell you, rally in this one, start trimming. Because, rate cuts traditionally are not super bullish. So let's talk about AMD. Remember the last death cross and rejection of AMD? What happened? Now, what is a death cross? A death cross is when the 50-day crosses the 200-day. If you don't know what that is, go and look it up on Investopedia. Get yourself a charting program. You can put these in, and you can set up alerts in Trendspider for this. But what happened the last time a death cross happened? And a rejection, okay? What the death cross is, okay? See this one? See the 50-day over here on the left, the blue line crossing that yellow line? The blue line is the SMA. The yellow line is the 200 SMA. So 50 versus 200. When that 50 crossed and the stock was still going up, but it got rejected and it pulled back down on the daily, what happened? We were down 53% in 6 months. Okay? AMD just had a death cross and a rejection off the 200-day. Again, does this make sense? Let's go look at AMD valuation. If the valuation is the issue, let's go look at it. Because the valuation right now is 48. NVIDIA's cheaper. NVIDIA's cheaper to buy. The PEG ratio, 0.92. Again, NVIDIA's cheaper to buy. So if it's about the valuation, maybe this one's telling us the future. Now, Dell and Palantir set to join the S&P 500. I talked about Palantir being super, super expensive. Let's look at the valuation of Palantir. Palantir, they're trading 94 times earnings. So as you're buying this and it's 11% up, understand you're trading 94 times earnings. You're trading 85 times forward earnings. It's expensive. You're trading and you're paying for the growth. The growth is tremendous. Okay? Even levered cash flow is beating its sector. Revenue growth of 21%. The sector's growing at 3.19. This is software. Software was unloved. Snowflake, unloved. Salesforce, unloved. ServiceNow, unloved. This one, it's loved. I would argue that this one might be a bubble. It very well might be a bubble. Let's look at the valuation of Dell. Okay? The valuation of Dell is 14 times earnings. Now, different sector because they're doing hardware. Different sector, but it's 14. Your PEG ratio is 1. Now, valuation, mind you, in a traditional sense, in the bubble of markets, it hasn't made sense. Tesla traded years on not making sense on the multiple. You're trading for that growth. Revenue growth in Dell, it's down 1.9%. Your levered free cash flow, they're not making it. So again, when you're looking at multiples, you have to understand what you're paying for. Those high multiples on Palantir, you're paying because it's got future growth. The low multiples on Dell make sense, but you're gonna have to, they're gonna have to grow. And so will it make sense to bet on that one to grow? I don't know. Yeah. We talked about valuation of Costco. You want to know why Costco trades so high? Go and watch this Instagram video. Here it is. They take you through Costco. This guy in Morning Brew, he takes you through Costco and he says, hey, this is what they do. This is the art of retail. This is why when you go into Costco, when you go into Target, when you go into Walmart, you wind up spending more money. Why did they put the free food samples in Costco at the back of the store? It's because every minute that you spend in the store, you're likely to spend $10 more. And that means additional revenue for them. But it's an expensive stock. It's trading at $891. We can go and look at the valuation of Costco. Look at the growth. It's at 7%. It's beating its sector. But then you go look at the valuation. It's trading 55 times earnings. NVIDIA is actually cheaper. It's cheaper. So again, I just want to point that out to you that there are issues with, and there are reasons for the Qs to go down. Meanwhile, the S&P 500 VOO may actually go up. The VOO support line, it's at 500. I mean, it's clear it's at 500. You're trading at 500 right now. The bottom support is going to be about 480. Yeah. And see that little highlighted red there? Those are the only times, that little sliver, this is a weekly, okay? This is when you're telling me, oh my God, my portfolio is so far down, this is the S&P 500. This is the standard, okay? My portfolio is so far down. Well, why is your portfolio so far down? When that little red sliver right there are the only people over the last 10 years that might be negative. Why is your portfolio so far down? Glass half full, glass half empty. Are you new to investing? Because this might be what you have to look forward to. You might have to look forward to this in 2022, this pullback, if we're going into a recession. I would argue no. But again, you don't know. So, am I cutting out? I hit stop. Hopefully, I see the recording here doesn't seem to cut out. I will look at Rolls-Royce. I will look at Bitcoin as well, Donnie and DL. Am I cutting out or is it just star? I will look at Rolls-Royce. I will look at Bitcoin. Okay, I don't know. I'm going to hit record again. So let's take a look at a couple of individual stocks. Let's look Tesla. Tesla's got some wild cards coming up. Q3 deliveries report, which will come, I don't know, October. It's a big October month. Margin pressures, moonshot robotaxi event reveals. I can tell you I have full self-driving. And every time they do an update, it's hard to judge what full self-driving actually is because when they do an update, it seems to go backwards for an update and it seems to move forward like 10 steps. So it's hard to tell where they're actually at, but I can tell you that actual Smart Summon, it's hit or miss. I'm seeing YouTube videos where it's hit or miss. And what this is, just so you know, there's no driver. It's in private parking lots, and they're throwing it into Costco parking lots on Saturdays. It does some things well. It does others not well. So I don't think that it's game changing in the point where you're going to have robo-taxis out there in December. I think Elon's probably going to put a robot driver in there or something's going to happen. But I do think that it's coming probably within the next 5 years. I don't think that it's ready for prime time. And so I don't think that my Tesla is going to go out there and earn stuff. I mean, again, you can see 3 times it's reached oversold territory and it's bounced each time. We had a nice bounce and we're still in that bounce. So from a weekly standpoint, this stock still looks like it's growing. And I put, this is last week's trend line where we looked at the monthly. And I think it was Fred, the editor of that newsletter, where he initially invested. And he said he was out. And there were a lot of people last week, I think, selling their Tesla stock. And, again, you can see it. He's up 10,000% since he bought. And if he bought at the high, he's been covering Tesla forever. But there are Tesla wildcards in the place. And all it would take is I don't trust Elon more than anybody. I do think he's a genius. I think he's built a great car. I think he's built a great company. My issue is I think his focus is off there. And I think his focus is on this election. And that's not a bad thing. I'm not making a political statement. I'm just saying his focus is off of Tesla and they've lost quite a few good people. And so am I willing to put my money into this? No, I'm owning it through XLY still. I did cut my XLY and I'll put it into other things. And the reason I cut my XLY is because of this. When you go to these sectors and you go over 1 year, where's XLY? It's right above energy. It's up 8%. I'll take 8% all day long. But when financial services is up 29% over 1 year, look at discretionary over 3 years. It's actually negative, minus 6.61. Okay. When energy is up 76%, I wouldn't invest in energy today. I think it had a great 2021 or 2022, whichever year that was. XLK, constant deliverer. It's up over 3 years, 27%. But we talked about the valuation and some of the multiples of that. When you go and look at XLK, what are their tops? It's Microsoft, NVIDIA, and Apple. So I would argue that XLK probably not a great new buy. Right now, I'm sitting there holding it. But when you go and look at the market data, it is clear that XLY, which is, by the way, I think it's 40% Amazon and Tesla. Let's see, it's 38%. 38%. There's XLY. Let's look at PayPal. I went over PayPal last week. I'm out of PayPal. Full disclosure, I'm out of PayPal. It's up 1%. PayPal wallet transactions to be integrated with Shopify payments. It's bullish for both. And then if you want some nuclear energy, here's a good podcast. Brad Gurley and Brad Gerstner, they went over nuclear energy. They went out to X. There's their thoughts on investing in nuclear energy inside Diablo Canyon. I think it's a good listen. I haven't listened to the full thing, haven't gotten through the whole thing, but I do like Brad Gerstner and Brad Gurley. I think they do a great job. From social requests, Adios America on Twitter, Spotfiy. I listen to you every day on your podcast. It's a buy in the Webull Quant, but the RSI is 60, PE is 177. Would you buy it for long-term play or after the rate cuts in a couple of weeks? Here's what and I got a lot of people asking me over the weekend, this stock or that stock, should I buy it before or after the rate cuts? Rate cuts for a long-term, doesn't matter. Rate cuts shouldn't even factor into your buy on a stock at this point if it's a long-term buy. Now, Spotfiy, I've owned it every now and then. I think Webull gives it to me when somebody signs up, and I find it in my account, and it's always up. It's been a monster of a stock. Take a look at this one from 2022. You can see clearly you're going to use that $380 right there, 387. As a top. You still have move up there. But on a weekly, your MACD is super high. Your RSI is at 60. So let's go and take a look at some of the valuation of this. If we go and look at the quant, it says hold at 3.47. When was the last time it was a buy? It was back here at 300. You're trading at 326 right now. It's up 1% today. Now, the valuation, we talked about the valuation. They're not making money. But their growth is phenomenal. Revenue growth, 16%. But their levered free cash flow, it's up 225%. But again, once they make that switch to actual profitability, they're going to do fine. But right now, their gross profit margin is 27%. The sector is at 50%. And this is movies and entertainment. What's the number one? Curiosity Stream, IMAX, Roku, Tencent. You know, we can take a look at Roku. Roku's one that Kathy Woods has loved, but it hasn't been great. The profitability, 45% gross profit margin. When you look at the growth, they're growing tremendously. Revenue's grown 16%. Is it good? I don't know. Momentum's a C. You know, short term, it's doing great. Long term, it's not doing great. When you look at Wall Street, their price target is 69%. That's only 5% up. $69. It's only 5% up. So am I buying Spotify? I don't think I'm buying, but if you want to buy, the algorithm provides you some protection. Now, mind you, over 24 months, you make 192% if you buy it. The algorithm, it gets you into 24 positions. So about once a month, it's making you 64%. Your average win is 14%. So that just means it's kind of, you know, floundering a little bit. You can see this one back here in March, a nice 31% gain. Since then, there haven't been any huge winners. There's been some losers. You do win them. But on the short term, I mean, you know, if you're buying for 3 to 5 years, what does a rate cut in September matter? I mean, is anybody going to be able to tell you that Spotify is a great buy before or after the rate cuts if you're looking for 3 to 5 years? I don't think a rate cut matters. I think your belief in the stock matters. Now, I know you use it. Are you a premium member? Do you pay for it? Yes, you listen to my podcast, but do you pay for it? Do you fast forward through the ads versus actually visiting the advertisers? Because the people that visit the advertisers, those are the ones where they're actually making money and the advertisers will continue to pay. If you don't visit the advertisers, then you're just passing it by and Spotify will most likely lose that ad revenue. I will lose the ad revenue. So I would put it in that term for you because they're not making money. So in my mind, I have to believe in the product. And if you believe in the product, have at it. I do believe that Spotify is the audio version. And I think that they're going to be the winner here. I think Apple Music is okay. I think Apple Podcast splits that out. I would probably see Apple integrating both Apple Music and Apple Podcasts at some point in time. But do I think that Spotify is the killer app? No, I'm on a family membership. I'm the 5th one in the family. I don't pay for it. My friend pays for it. I just kind of lob on. So I'm not invested in it, but it's an interesting one. Now, Cyber Gangster wants me to look at Oracle. He put a chart in there. I will put the chart in the newsletter so you can see his chart. It's from Trendspider. He's got a little different chart than I do. But from email, wants me to look at Oracle. Their earnings are today, by the way, after the bell. It's an interesting one. The way he found this was he went to Earnings Hub. And if you go to Earnings Hub, now here's the dirty little secret of Earnings Hub. Let me sign in here real quick. Because the dirty little secret of Earnings Hub is if you look at activity, okay, you can see August 7th, I sold 100% of my position for an 8% gain in Oracle. Where's that from? That's from my trading portfolio. That's the paid portfolio, okay? So you can see even the paid portfolios, you can see they're winning. Now, Mom Investor Kim, who I'm on spaces with every now and then, June 6th, she added to it. She's purchased 50% more. She's been doubling down on this one. Ali Trading Secrets, he's been adding initial at 141.19. Let's go and look at the stock chart. It's at 142. Algorithm got you in at 132. Now, I got out at around this time. When was it? Let's see. Oracle, it was August 7th. I got out to raise cash. Okay, so August 7th was right at very bottom. At the very bottom, I raised cash. Okay? In the trading portfolio, I raised cash. This is a personal one where I actually traded this one. I raised cash in the portfolio and I sold out. But my average purchase was somewhere around 118, 122, somewhere in that neighborhood. I made 7%. It wasn't a huge one. I should have sold up here. I should have bought back down here instead of selling. That's what I'm telling you. Don't sell into weakness, sell into strength. I was raising cash because I wanted to buy. Did I buy more? No, I didn't believe this rally. So at 132, it's up there. Let's take a look at the valuation of Oracle because we just talked about how things are expensive from a valuation perspective. This one trading at 22. Sector's right at 22. 25 on the trailing 12 months. The PEG ratio, 1.91. That's not horrible. It's a little bit high, but it's not horrible. Their growth, though, they're not doing so great. I mean, it's not, oh my God, we've got to get into this one. Levered free cash flow year over year, only up 9%. Sector's up 23%. Profitability, A+. They are making 71% gross profit margin. Momentum, it is up. Revisions, B-. There's 9 people that have brought it down on revenue and earnings per share. If we go and we look at the quant, it's had it as a hold since 124, and you're at 142. Quant's been wrong. But at some point in time, it probably comes back down. Wall Street says it's a $149 price target. Now, maybe after earnings today, they chase it up, because look at what they've done. They chased it up. But they would have to have a hell of an earnings beat in order to actually get this one. If you go over here to Earnings Hub and you look, they reported last time $1.63. Their estimate this time, $1.32. Last time they reported 14.29. They're expecting a slowdown. I don't know. It's an interesting one to me. But have I gotten back into it? No. But Cyber Gangster used Earnings Hub. He found that activity over there. If you ever want to see who's buying and selling on Savvy Trader, remember, Earnings Hub is owned and run by Savvy Trader. So this is just a situation where they'll take you to the Savvy Trader portfolio, and that's my trading portfolio. So, that's the paid one that I agreed that I would pay it on. But Cyber Gangster did a little deep dive, and he found it. Let's see, from the newsletter, Chital. Hi, Gary. I love your podcast. It's very educational. Can you please share your thoughts on SQQQ? Thank you. Here are my thoughts on SQQQ. So we talk about SQQQ. If you didn't know, it's a daily triple leveraged ETF. It is a decaying asset. So while you're dealing with a downward market, this one will go up. It's an inverse. It's a short of the QQQ. So you've done very well in this, because you can see the algorithm just had you out with a 26% gain here from July 15th, which was the low, and you got all the way up here to $11. So if you bought it $7 and you held it to 11, you did really, really well with a nice, over 20, 25 days, 44% gain. You did great. It's not going to be typical. Currently right now, you've got let's see, you bought in at 823. You got a nice 18% gain going. Today, you are down 3%. Again, it's leveraged daily. So my guidance on SQQQ, Chital, is just to take it lightly, okay? Don't go balls deep on this one. Don't think you're going to protect your portfolio. Don't think that you're going to do anything huge in these ETFs. It's like TQQQ. Ultimately, TQQQ has worked out for the long term because QQQ has been up. God forbid you have a pullback like 2022, then it's going to go down. So here's where you are on SQQQ. I would say, if you think that the market's going to continue to go down, buy SQQQ. But look at the long term on this, okay? Look at the weekly. It's a decaying asset. It's just something, you've gotten some people here. As you've gotten into the bull market, people love to bet against it. Look at the volume that this is trading. People have gotten into this. Volume will drive price. But do I think that this is one that you want to put into long term? No. I think you trade it. Maybe on the 4-hour algorithm, it still loses you. I would trade it on a very tight time frame. But again, I'm 54 years old. I am different than you. So understand, strategies may be very different. We talked about how this was, over 25 days, you made 44% currently in the 4 hours since that July 15th. I'm sorry, that was the July 15th. This is look at how many times this 65-minute got you in and out. Ultimately, you should have been positive. You had a nice 16% few days. This is the 65-minute. You can see the staircase up, but you don't always win. It sometimes gets you out. You lose 1.8% versus buying and holding over 8 months in the 65-minute loses you 31%. So again, you have to find a strategy. You can build a strategy in Trendspider. In fact, the Variance Explorer will help you build a strategy that maybe works for SQQQ. I wouldn't go in naked and trying that one. If you're going to try and play QQQ or SQQQ and TQQQ against each other, I would say on days where you're hugely down, okay, expect TQQQ to be up. So on a day like Friday when you were down, it was just a bloodbath. At 4 o'clock, just buy TQQQ. You know, I wouldn't say buy it over the weekend. That's a little bit crazy. Buy it on Monday morning or buy it today and trade it on a tight time frame. But if we're up today with the valuation that we just saw on the Qs, at 4 o'clock, buy SQQQ. And then tomorrow, we might be down. You know, you got CPI and PPI data coming out on Tuesday and Wednesday. That's going to indicate a soft landing. But again, that's the way you want to think. These are option style buys. This is not something where you want to buy. These are not investments. Nick from Spotfiy, thoughts on Shell? RSI and MACD and stochastic slow are looking great for an uptrend. Looks like it's bottoming out right now. I see potential going back to 72. Let's get your take. Shell, SHEL. This is energy. I am by no means an energy expert. I don't see strength in that one, Nick. I don't see strength. I see weakness. Now, today, you're up 0.39%, 0.39. I don't see strength. I see weakness. I see the RSI beaten down. I see the MACD still going down. I don't see it turning over. I see the 9-day pointing down. I see the death cross of the 50-day on the 200-day. You know, we can take a look at a weekly on this one, and you're seeing it just broke the 50-day. Your MACD still a little bit high, not super high, still a little bit high. Your RSI is at 40. I see the 50-day moving positive. I see the 200-day moving positive. But if we pull this back here where the golden cross took place and we look at where all the price is, you're sitting right at a shelf there. But that's your value area high. Okay, your value area low is down at 50. It's not a huge, it's a huge percentage. But for it to move from 60 down to 67 down to 61, I think that might be a potential. Because again, if I'm looking at this and I'm saying, okay, the last breakout that it had was right here at 68, and we've broken through that. Where's the next one? The next support from a breakout perspective is this candle down here at 61. I'd rather buy at 61. You can see how it almost held it right there. I'd rather buy at 61 than 67, thinking that 68 is going to be a resistance level. Maybe this has turned into support. Maybe you just broke it like you did back. Valuation makes sense, probably because it's a freaking energy stock. The valuation 7.91. The sector is trading at 9.93. That's great. Wall Street says it's a $82 price target. They chased it up. I mean, just look at the reality of this. They chased it up since 2022. There's nothing more than they chased it up. There's 15 analysts that cover this. Nobody's lowered it. Their growth sucks. They're losing 15% revenue year over year. Profitability, fantastic. The price of oil is going to drive this one. If the price of oil goes up, this one's going to go up. China right now is weak. I'm not looking at oil or energy as a super bullish sector. So in my mind, I think I look at the weekly on this one and I say, as it comes down towards 63, 64, I get interested. At 67 with weakness on the 4-hour, I'm not looking at it as being huge, but it's something that's interesting. Again, when you look at the industry, it's ranked 7. What's number 1? Sunco. Let's look at SU. You look at it in the buy from Wall Street's perspective, it's a $45 price target. You can see they haven't chased this one up. It's kind of leveled off. Let's look at SU chart because SU, again, it's going to be the same thing with oil. Again, it's looking weak on the 4-hour. MACD low. RSI oversold at 28. Might be interested for a bounce. Let's look at the weekly chart because I can see the weekly, you haven't even broken the 50-day. Okay, maybe you have more downside to 35 from 37. But the 50 and the 200 are looking. But if you look at this one where it broke out last time, it's looking like that high value area at 35 is the same thing. Oil's going to trade on the same thing. Oil is oil. And so, Shell, all of those, it's going to trade on the price of oil. Scans, we got DHR, which is Danaher. This one's interesting. It's got a buy here at 266, but that earnings gap down below, it started to cover it. I'd be nervous about that one. You have AMZD, which is a leveraged ETF on Amazon. You have DraftKings. If nobody watched the football this weekend, it was fantastic. Google kudos to you guys. You guys did it right this year. That multi-mix is fantastic. I signed up for Google TV and the NFL package. But yeah, you're looking at DraftKings. Nice little rebound here. 36 here on Friday. It looks like Thursday. So DraftKings, another little leg up. Again, I think that 50 days starting to turn. Now you can look at a weekly on this one and say, well, what are we using? We're using the 200 days support at 33. I think this one easily could pop to 40. You know, your MACD down below its oscillator. These guys are doing it right. What do they give? 3 months of the NHL Plus or something, or 1 month free when you sign up, when you just deposit some money. They're spending some money to get it. But again, you're below that value high area. If we're heading into a bullish market, this one's going to blow. So again, if you have any questions, hit me up. The newsletter is free, dailystockpick.substack.com. Any of the links are over here on Linktree. You've got Seeking Alpha. You got Alpha Picks. Say you just listened to me for about an hour and you said, you know what, Gary, you're a blowhard. I don't want to listen to you pick stocks. I just want stocks handed to me. That's where Alpha Pick comes along. I will have a bundle offer. I don't know what it is, but if you listen this long, I'm going to put it in the newsletter. They just opened it up to me. It's a bundle offer with Seeking Alpha Premium and Alpha Picks. So you're going to be able to get those. What's Alpha Picks? It's just a portfolio. You get one stock on the first, one stock on the 15th. They tell you when to sell those stocks. It's a managed portfolio. You get emails, you get alerts, you get full disclosure, and you get full analysis. It's not Jim Cramer's texting service that we bought this stock at this price, and we'll tell you at our monthly meeting why we bought this stock. No, it's a full analysis of the stock at the time of the sale, and it's not random. So if you have a job with Jim Cramer's texting service, maybe you missed some of those. This one, it's on the 1st and the 15th. It's a long-term buy and hold. Look at the performance, 114% versus 38%. So if you're down in this market, if for some reason you are one of these people who bought in this little red territory up here on the weekly, okay, and you're not very good at picking stocks or you're feeling nervous, Alpha Picks is the way to go. It's a proven performance by a group and a systematic way, data-driven stocks. It's the quant. It's simply the quant. And if you want to pick your own stocks, the quant is the way to go, and that's Seeking Alpha Premium. But if you want both, I'll have an offer for both, and it'll be up on Linktree. It'll be in the newsletter as well. So, okay, that's it. Talk to you later. Bye. Did I cut out? I was looking at the sound modular, and the sound kept. I hope the recording is up. Who FaceTimed me? Oh, please call when you get a chance, Mom. Ooh. Okay, Substack just invited me to host live chats. Sweet. It's 10:10. Okay. Let me scroll back. I'm here late, so. Rolls Royce. RR? Rich Tech Robots is RR. DL, do you know the symbol that you invested in? Because if it's RR, that's a totally different company than Rolls-Royce. That's a totally different stock. So I'll wait for you to tell me what stock it is. Bitcoin, just do IBIT and MicroStrategy like I did. IBIT is up 4% today. It's loving this range. It's loving this $31 to $38 range. When you look at a weekly, we had, this is only traded for a very short period of time. So it's hard for me to say. Bitcoin from a standpoint of US dollar, Oh, not that one. BTC. I always have to do this. Bitcoin to US dollar. I mean, it's a bullish trend. It's just got some range bound here. You know, as rates come down, risk goes up. So people will want to bet on Bitcoin. And that's the logic of it. But if the economy crashes, people are going to put money out of Bitcoin. Then it's going to freak out. Yeah, Rolls-Royce. Here's the thing, Chris. Rolls-Royce, he says in the comments, DL said, hey, Gary, can you look over Rolls-Royce? I'd like to know your thoughts. But he puts in RR. That's a robotics company. I had this at 80p. I don't know what, 80 pounds, I guess. And sold stupidly after a 30% gain. This how it skyrocketed. But I don't know if RR is the symbol. It sounds like it's foreign. So I mean, I was like asking McDonald's, how's the Whopper? But Dale, I know, joins us every day. So, XLE and XLF, SMCI is going to take a long time. I mean, it's up 4% today, but I can't imagine that this is going to be a quick turnaround. You know, you've gotten back into this kind of breakout range. And so I think 260, 270, 300 may be in the cards there. Why did I go to touch my freaking screen? Yeah, financials still look really good. That's the problem is I'm the same as you, Chris. I just don't know them well. So XLF is a great one. I do know Bank of America, Wells Fargo, Citibank, and I think Schwab are ones that I own. I just got rid of Morgan Stanley. It was a small position though. Dan Ives is just good. I think he did do. I think he was sitting there with his glasses on, if I'm right, Scott. Yeah, some of those leveraged ETFs, Steph, they're great. But when they start to go wrong, look at that pullback. 134 all the way down to 120 in what, 2 days? So you got to be careful about when you get in and what you're doing. I think this one, FAS, the bull, is great for rate cuts. You just, on the weekly, you just had that golden cross. And at 126, it doesn't even look on the 4 hour. It does look like if I were to do just a thing right here, let's see, the high is 123.66. Look at how it kind of just is, what's today? The low, 124.35. I think if you get that down to that 124 level, I think you could look at it, but that's a very, very short term look. If you want a longer term look and you were to look at that 124, the other thing you could do is just look at back here. I don't know if this makes sense because it's way back here, but that 150 price range might be an interesting one. I mean, you touch multiple weeks here. And that was the highs of 2021. And you just had the golden cross. So, Dollar General and Dollar Tree, I wouldn't touch. And I'm with Chris. Here's the thing, Perry, and this is what you have to think about. Do you shop at Dollar General and Dollar Tree? I'm a big believer in that if you don't buy the stock. Yes, any reaction in the market is an overreaction. But that low-end consumer that they target is just crazy weak right now. And they're, not taxing on tips. That ain't going to help Dollar General and Dollar Tree. What would help Dollar General and Dollar Tree is if they actually raised the bottom level of the tax bracket from, I think it's like 19, anything under 19,000, it's 0 to 1% or something. Let's see. Tax brackets 2023. Here we go. Here's the tax brackets. So single, if they raised it, 0 to $11,000, essentially anything under 20,000, I think, because you get that standard right on, or is it 12,000? Anything under 12,000 is 0 because you don't get a, or this is 2024. Okay. So you get the standard write-off, I think of 12,500 or something like that. So anything under 12,500 is not taxed. If you went from 47,150 at 12%, if you upped that, okay, to 60,000 to 12%, okay, you reduce the income, but not by a great amount, and you help out that lower end consumer. So in my mind, I don't think these games that these politicians are playing are doing anything for the lower end consumer. This is the tax bracket that you want to target, and you want to raise that for a single person from the top 47,000 and the top head of household to 60,000, or the top married filed jointly 94,000. If you raise that up to 120,000 for filing jointly, head of household, you raise that up to 80,000. Single, you raise that up to 60,000. Then you have people paying 12% instead of 22%. Okay, you actually help the low end consumer. Until that happens, Dollar Tree and Dollar General, with inflation the way that it is, it ain't gonna help. Their 10% wage gain that they're seeing, their minimum wage going up, they're not flush with cash. And Dollar General and Dollar Tree, they've had their costs go up. So, and Walmart's eating their lunch. So I don't believe in that type of strategy. But remember, I'm a large cap tech investor. So that's where my bread and butter is made. That's where I'm kind of doing. I just don't believe that those stores can turn it around, because even if Trump wins, you're gonna have tariffs. What do tariffs hurt? It hurts Dollar Tree and Dollar General because they import so much stuff from China and other places. So I don't believe in that strategy. Okay. I got to go. My mama said, hey, call me when you get a chance. So I got to go call her. And it's 10:20. Okay. I will see you guys tomorrow. Take care.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't